Good morning and welcome this morning to Trading with Technical Indicators, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Michael Fairborn, who is also a phenomenal educator in his own right. Glad to have Mike out there in the chat answering questions. I get the opportunity to fill in for James Boyd today in this discussion as we talk a little bit about using technical indicators as a means to enter and exit and manage trades. And so this is a topic that, gosh, I've been working on, whether intentionally or kind of on an anecdotal and occasional basis for the better part of, 40 years somewhat in terms of trading and so forth. And whether it's been just writing down prices on a notepad or whether it's actually been using technical charts, whether those are point and figure, whether those are candlestick charts or bar charts or whatever it might be. It's something that I've been involved in for a long time. That said, I'm not going to say that there's always something new, but there's always kind of a different way to look at things. And we just got done teaching in Chicago this weekend a technical analysis and option strategies workshop. And in that workshop, invariably on day one, which is when we teach technical analysis, I'll get questions in between sections of the workshop at the breaks. Hey, what about this? What about this idea? And so I know that there's always this idea that there's something better, that there's some kind of better indicator, or there's some kind of better system way to combine technical indicators into something that is, I don't know, better? How do you could quantify better, right? What determines better? And I think for me, the understanding of what is better is something that is consistent and repeatable. So consistent and repeatable means that I don't have to decode or decipher complexities when I just simply want to look at entering a trade or exiting a trade. So my intent today is to create a system or talk about a system, a technical analysis based trading system that is pretty straightforward. It is consistent. It is repeatable. Now, consistency in this particular case does not mean consistently successful because any trading strategy breaks down at certain times and with certain symbols. But we're going to get into a discussion about using some of the common elements, and these are the common elements that we teach. Whether it's Michael Fairborn teaching trend trading, or whether it is Barb Armstrong teaching trading a smaller account, or whether it is Scott Thompson teaching the basics of stock trading, or Rachel Dashell teaching price patterns. There are some common elements that we teach. One is trading in the trend. Two is looking at where levels of support and resistance are. Three is using some kind of momentum indicator, and four is managing a risk. And if that's kind of the basic breakdown of the system, it does not need, a trading system does not need to be any more complex than that necessarily, as long as you manage your risk. So we're going to jump into that here. A couple of quick housekeeping items before we get to that, though. Remember that everything we talk about is simply for illustrative and educational purposes only. Not a recommendation of any particular symbol or strategy, not a recommendation or solicitation of a particular account type or anything else. If we do happen to talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option transaction. Technical analysis, obviously, because the name of this particular webcast is going to be the basis of this discussion. However, it's theoretical in nature, but so is fundamental analysis. So is probability analysis. So any way that you look at the market is theoretical because it's a dynamic market and we don't know all of the pieces that are at work. Because of that, Schwab doesn't recommend the use of technical analysis, sole means of investment research. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version of that platform. Not a guarantee of future success. Some of the changes are the paper money platform doesn't work with customized studies in the scan tool, But the biggest one that's going to be realized is the difference in where orders get filled. Paper money orders fill at an algorithmically derived midpoint. Real life trading and a live trading account, market forces are going to dictate where those orders get filled. Past performance not a guarantee future results or success. No guarantee that stop orders will be at or near the stop price. And we'll talk about that as we get into this discussion. So I'm just going to jump out to the Thinkorswim desktop software platform here, and we're going to talk through a process. I'm going to hide a couple of things really quickly on my chart for just a minute, and then we're going to talk through that process of how we might build a system, right? And how we might build a system. I'm going to bring up an individual stock here, MSFT, because perhaps one of the most challenging times of getting into a trade is when that individual instrument is in transition between an uptrend and a downtrend, or a downtrend and an uptrend. It's relatively easy and not very complex. And when I say relatively easy, make sure that you understand that I'm not saying that trading is easy, because trading is not an easy process. It requires concentration and attention and an evaluation of risk. But it's when a stock is moving in an upward direction, and I'll just put on here an example of a stock that has generally been moving in an upward direction. This is GE, right? Or Delta Airlines has been moving generally in an upward direction. Or GE Vernova has been moving in an upward direction. Or MU's been moving in an upward direction, right? When we've got a stock that's generally trending in an upward direction, whether you define that by looking at higher highs and higher lows, or whether you define it by looking at a trend line, whether you look at a linear regression line like we've done in the past, whether you look at a moving average, it doesn't matter. At just about any point along that uptrend, it becomes relatively less complex to get into the trade, because if the presumption is that the trade is going to continue to move higher, what differs is where you enter relative to what you ultimately gain as far as potential profit in the trade. Because getting into a trade like this one on MU, anywhere along this line where the trend continues, ultimately results in some gain in the trade. Now, that's not a guarantee, obviously, because at any particular point that you get into the trade, the stock or the market could turn down. But if I got in here in this trade at 319 versus this breakout at 457, the difference is very simply a difference of dollars invested in the trade and potential gain, right? So when we start to think about how over periods of time of transition, that's when maybe it becomes a little more difficult. So I'm going to go back to that MSFT Microsoft example, because now you have to ask the question, and we ask this question in the technical analysis workshop: how do we understand confirmation about entering a trade? What gives us that confidence that getting into a trade is ultimately going to have a high probability of leading to success, because there's no guarantee. So when you've got a stock that's kind of moving in this up and down transition, and if your intent is to trade that longer term trend, at some point we've got to make a decision about what the confirmation is. We've got to be able to say, if this happens, then I'm going to get into the trade, else I'm going to wait. And that kind of defines what we're looking for in terms of that confirmation. So the first metric that I'm going to use in building this system is very simple, and then I'll line it out. So the system that I put together is based first of all on a typical moving average period, in this particular case 30 days, which is just a little bit beyond a 1 month time frame. So we're kind of moving from a short term to an intermediate term time frame as far as a moving average. Days to weeks, and now we're just moving into weeks to months. So I'm going to pop on here a 30-period moving average. And I'm just going to light that up by opening up that eyeball and click on apply. So my 30-period moving average is moving in a downward direction. But generally, It's kind of now moving from an overall downward direction to some oscillation back and forth. And it's back down near a point where it has oscillated before. That doesn't mean that it won't keep going to the downside here in this particular case. So if the trend were moving up, if the 30 period moving average, and it doesn't matter if it's a simple moving average or an exponential moving average or a whole moving average or anything else. And as a matter of fact, if you want to challenge me on that, I've done a couple of webcasts where we back tested comparisons between equal length of time, simple moving averages, exponential moving averages, displaced moving averages, and whole moving averages on the same stock over the same time period, and more often than not, meaning better than 50% expectancy, the winner came out to be a simple moving average. That doesn't mean it's the best. It just meant that in that particular subset of circumstances, a simple moving average worked well. So we're using a simple moving average here. The price of the stock right now of Microsoft is above the 30-period moving average. So plain and simple, objectively, without argument, what we know is that price is gaining strength relative to that simple 30-period moving average. Price is accelerating relative to that simple moving average because price is a moving average of 1. This is a moving average of 30 periods. So I know that price right now is moving faster than the 30-period moving average. Cool. That gives me an idea. But we also know that a moving average of 1 can be very, very fast and can give us false signals. So in addition to the 30-period moving average, I'm going to add a shorter term moving average, but longer than a moving average of 1, which is what price is. So if I add a shorter moving average than the 30 and longer than 1, I'm going to kind of fall right at the other edge, if you will, of the short term to intermediate term boundary layer. That boundary layer is going to be right about, for me at least in this particular case, right about 10 periods, 10 days. 5 trading days in a week, 2 trading weeks makes up a 10-day moving average. So that's kind of that little bit of a short-term relationship to an intermediate-term relationship. So I'm going to pop in here a 10-period moving average, and I'm going to click on apply and OK. And again, simple moving average. And by the way, you're right, zinc, nice engulfing candle. It's also a close or trade, at least at the moment, above the high of the low day. So you're right, Sam. Price above the 30 period is a typical legitimate entry point. Price above the 10 is a legitimate entry point into a trade because now you've got a moving average of 1 moving above a moving average of 10. Now we've got 2 things going on here, right? The 10-period moving average has now moved above the 30-period moving average. So now the 10-period look back is up above and accelerating ahead of the 30-period look back, if you want to even phrase it that way, right? So now we've got price above the 10 and the 30. We've got the 10 above the 30. That gives us an indication that in the short term, moving into the intermediate term time frame, price is accelerating out of an area of consolidation. Now, does that mean that this is going to be a longer term uptrend? This is going to turn into a longer term uptrend? Absolutely not. Because if you'll notice, and this is a pretty good example, and this is one of the reasons why I chose this particular instrument as an example of this relationship, is that price back here in April was above the 10. It was above the 30. The 10 moved above the 30. It went up for a little bit, and then it went sideways. And then it went down. And we had that kind of whipsaw effect. So this whole time frame here, and I would argue that we're probably still in that time frame, is kind of a whipsaw relationship. So maybe we now need to kind of include something else into the mix, right? Something else into the mix would be an indication perhaps of something else confirming the momentum of this movement, because we know that momentum can be deceptive. We know that we can have price movement above without a lot of oomph behind it, or movement below an area without a lot of oomph behind it. So I want to add into this mix, and again, we're building this system fairly simply here. I want to add into the mix something else. And we're going to add a momentum indicator. And yes, we know that we have an earnings announcement over the horizon here. And an earnings announcement over the horizon is likely to do one of three things. It's likely to make the price of the stock move up, it's likely to make the price of the stock move down, or it's likely to make the price of the stock do nothing at all. I don't know which one of those three it's going to be, and neither do you. Because even if you knew, or anybody else knew, what the numbers were going to be, even if you or anybody else knew what the numbers were going to be, I don't care how many times it's done it before in the past, how many times it's gone up, how many times it's gone down on earnings announcements, the way the market reacts to earnings and what the earnings report is an unknown. That's why earnings announcements bring higher volatility, both statistically realized volatility as well as implied volatility. So I don't know what this earnings announcement is going to do. So I can do one of two things. I can either trade through it, or I can avoid it and trade out. In this particular case, I'm going to look at trading because what else are we going to do? I mean, there are times when the market has moved this down on earnings. There are times when the market has moved this up on earnings. So it's 6-5 and pick 'em here when it comes to the possibility of upward, downward, or sideways movement. Maybe even a little bit less than that, because that's just kind of an even money bet. So I've got an additional confirming factor that I want to add into the mix. But it's always a good idea to when that earnings is, especially if you now start to move that trading shorter term, because there's likely to be more short-term influence, right? So what I'm going to do is I'm going to put into this mix, I'm going to bring up my Flask icon up here at the top, and I'm going to bring in the bare bones, out of the box stock MACD histogram view, right? And this is a 12-26-9. That is the default for this particular indicator. So the reason I'm using the MACD in this particular case is I've already got a trend following system that I'm building here. I'm using moving averages. Moving averages follow trend over a period of time. MACD uses moving averages. These are consistent indicators. I could use something like an RSI indicator or an ADX or a money flow oscillator or something else. But those are all going to have different components that are going to factor into the mix and maybe better in other conditions. An oscillating indicator like the MACD histogram that is a centered oscillator, right? Where that acceleration gives us a distilled signal where it's moving above a zero line or below a zero line, and it's either expanding or it's contracting, can be a solid indicator to complement what we're seeing with those moving average crossovers. So that's why we're using the MACD in this particular case. Is it the best? I don't know. Are there others? Yeah. So don't get caught up in the idea that there is one best, because there's not. So I've got moving average crossing over. I've got that price accelerating up and away from. And if you look at the MACD here again, which remember this range or this distance in the histogram is reflective of the difference between the initial moving average in the MACD and the smoothed moving average in the MACD. And as that distance grows, meaning it's accelerating up and away from the smoothed, the pile or this histogram, that range is getting larger. And if they're converging, that's where you get the zero line. And if the simple moving average is moving away from the smooth moving average to the downside, that's when you get that negative momentum. So when this range, that acceleration is growing or that momentum is growing, you're going to see successively higher bars in that MACD histogram, right? So now that I'm looking at this, as I look at this MACD, this upward pile, we're above the zero line and expanding. So I had a little bit of a contraction yesterday. We had a down candle day, or Friday that we had a down candle day. That momentum moved down a little bit, but it didn't move down significantly. And today we've got a little bit stronger momentum in this particular case. So right now, as this sits, if I were to define my if this then that statement, it would be this. If the price of the stock is currently trading above the 10 period moving average and the 30 period moving average, and the 10 period moving average is above the 30, and the MACD histogram is above the zero line and expanding, then enter the trade. So it's a pretty complex, I mean, even though it's a simple system, it's a pretty complex kind of structure in terms of what has to happen, but it's easy to see on a chart and it's easy to define. If price is above the 10 and the 30, 10's above the 30, MACD is moving up and it's above the zero line. Now I've got an entry signal. So that is where we are at the moment. And I chose this one specifically for where it is in this range and what it's doing in terms of its signal that it's giving me. So do I know and do I have any confidence that this breakout that we're seeing is going to turn into a longer term uptrend or a long term uptrend or an intermediate term uptrend? I don't. I have a lot more confidence in the near term. I have a lot more confidence in the near term that this may turn into an intermediate term trend, uptrend, than that it may turn into a long term uptrend, right? So, Rita, would I say that expanding MACD is light green bars only or any green bars? Let's zoom in here and I'll show you what I mean. The reason that that bar is dark green is because it closed, or that bar close was lower than the previous bar. That's why it's dark green as opposed to light green. So yeah, I think you could quantify it, read it by saying, yeah, I want to see a light green bar, because that light green bar means that that bar was higher than the bar before. So that's an indication of expansion. So I'm glad that you brought that up. And so that's kind of a clearer definition. That kind of brings that into some more clarity. So I'm going to look at getting in this trade. Now, the next step in this consistency, I said, was because I still don't have a guarantee, and no system, no trading system is going to give us a guarantee. The price of the stock still could, based on news, which we can't predict. Number one, can't predict its existence. Number two, we can't predict its impact on the price of the stock. So I have to manage risk at some point. So how would I manage risk? Well, I could use a level of support or resistance, which is what these moving averages are. Generally, their prices, and the reason that they occur, they're mathematically derived levels of support and resistance. And oftentimes the market will use them as levels of support and resistance. So I could use one of those as a stop location, right? As a place to locate my stop. I could use a discretionarily drawn level of support or resistance. I could say, hey, you know what? I've got a level of support right here, or I've got a level of support down here, or I've got a level of support right here. Wherever I wanted to discretionarily draw my level of support in this particular case, I can do that. Now, here's the thing. I could also use something that is based on the volatility of the price of the stock as it is statistically and historically realized. Meaning, what has it done in the past? Now, not that that's a guarantee, but maybe that's a little bit stronger guarantee in terms of, or a little bit stronger indication of the range in which it's been moving in than something like a forward-looking implied volatility. Implied volatility has its place, but so does historical volatility. And if we were to use a tool like ATR, average true range, right? Average true range. Then I can take that statistically realized or historical volatility and project it into a typical range of movement. So, we're kind of throwing some other stuff in here. Yeah, you could use a Bollinger Band stop. You could use an ATR stop. We're going to, in this case, to keep it relatively simple, we're going to use an ATR stop. And Barb Armstrong does this in her trading a smaller account. James does this, I think, in a couple of the systems that he talks about. I think Mike Fairborn does this in his swing trading webcast as well. So Rita says, is there a reason we would choose a horizontal support versus staying above the 10-period simple moving average that we use to help decide us get in? No, you could use, like I said, you could use that 10-period moving average. That could be your level of support that you use as your defining factor. You could also use a discretionarily drawn in diagonal trend line that connects some dots. And you notice that that's going to correlate pretty closely to that 10-period moving average. You could absolutely use that. And that's going to be relatively tight. So what I want to do, though, in this particular case, is I'm going to use ATR, and I'm going to use 2 times ATR. And I'm going to come up here to my Flask icon. I'm going to come down here, and I'm going to go to ATR, and I'm going to turn that on. And click on Apply and OK. Now, if I remember right, I think I may have done this. So give me a second, if you wouldn't mind, if you'll give me some latitude in this mix. I think I have a label script that I scripted, and probably with Michael's help, to show ATR, average true range values, based on the current ATR and the current price of the stock, and they help me define where the stop is. And I think we did that when we were doing an intraday system in this particular class, if I remember correctly. Some of you might remember that. But right now, the ATR is 12 points. Right, so 2 times ATR, if we were going to use that as a stop, it's going to be 24 points below where the price of the stock is right now. But if I come back over here, I'm going to just type in ATR, and I think I had that. Expanded ATR labels, that might be the one that I did. I think that's it. Let me just double check and see. So I'm going to put that in the mix here. Expanded ATR labels, click on Apply, and OK. It is. OK, cool. You know what I'm going to do? Because I like you guys are really cool. I'm going to share this. And remember that when we share things, where we share items, it is not guaranteed as to time or accuracy. It is for illustrative and educational purposes only. But if you weren't in the class when we did that before, there it is. There's that ATR label script. And I'll click on Apply and OK. So what it's going to do is it's going to show what the current ATR is. 1 times ATR gives you a price. -1 ATR gives you a price. Plus 2 ATR gives us a price. -2 ATR gives us a price. So we can use that -2 ATR level at 369 to say that's where I'm willing to stop this trade out. Now, that's a fair piece, right? I mean, that's 24 points to the downside. So that might be too much for some traders. That might be too little for some traders. If you have a longer term perspective, we're going to use that 2 times ATR as our initial stop to get into the trade. Now, some traders might do this, and this is maybe a variation that you can riff on this system with, is some traders may use 1 times ATR as that initial stop, and then when the price now moves to a new high, then increase that stop, or at least once you've gotten to your entry point, then increase that stop up to a 2 times ATR so that you can kind of give it some latitude to move. I'm just going to keep it simple. We're going to just keep this at 2 times ATR as our stop consideration. So we're going to look at getting into the trade. And we're just going to use the current trading price of the stock, which is currently 401.92. I'm just going to right click and I'm going to do a buy custom with stop in this particular case. So I'm going to do a limit order, but we're going to work that limit a little bit inside where this price is right now. It's now at 402.09. We're going to try to work that down a little bit. So I'm going to float that open a little bit, and we'll kind of work this as we get closer to putting this trade on. Now we've got to put our stop in place. Remember that stops don't guarantee at what price we exit the trade. They're going to give us a trigger price, but they're not going to give us an exact price at which we might exit, which is why some traders use other methods besides a stop to protect positions, maybe a protective put, for instance, which we sometimes talk about. So 369.41 is our current minus 2 times ATR level. That's going to be my stop trigger, right? Maybe my math is wrong. Actually my math might be wrong, right? Now you could do an ATR trailing stop, and once you get into the trade, maintaining this trade with an ATR based trailing stop using that study may be a way to do that, right? Maybe my math is wrong in that one. I'll have to double check that. It would seem certainly that 402 minus 2 times 12.2, right? That would put us down at 379. So maybe my formula in that script. Remember why I said that they are not guaranteed for time or accuracy? Huh, interesting. Okay. So maybe I've got to adjust that. You know what? I'm going to be willing to give Acha the benefit of the doubt here. 376 point, we'll call it 42, just so that we make it at a different level. 376.41, 376.42. Yeah. Oh, there we go. Yeah, the ATR must be based on the opening price. Good point. That's the calculation. There you go. Price is moving around, so is my script for sure. So, because remember, that's going to lag a little bit. So that's a good point. Thank you for pointing that out, Virgil. Good conversation here. Okay, so we're going to take 376. I'm going to take that based on where the price of the stock is currently. And you're right, the price is moving around a little bit. I've go open up that lock, and I'm going to kind of keep that. I'm going to try to work that back towards that midpoint or inside that mid to see if I can get it at a little bit better price. And now I'm going to click on confirm and send and read through this order. So I'm going to buy 100 shares. I haven't done any kind of fractional ownership or fixed fractional position sizing. I'm just simply going to buy 100 shares in this particular case. But you could manage the number of shares that you're trading based on your risk tolerance in the trade and the size of your account. Because what you've gotten then in terms of risk is about $26 per share, $24 of risk per share in the trade, $25 of risk per share in the trade. So the cost of the trade is going to be that cost to get in at 402 times 100 shares. That's going to be 402.26 roughly. So I'm going to go ahead and I'm going to put this in our market movers group just so that I've got that in a location that I can come back to. And I'm going to go ahead and click on send and we'll see if that fills. And we got it under that level. We filled it at 402.08. Okay. Yeah, so good, the formula says yesterday's close. Oh, you're right. Okay. So good. Thanks, guys, for catching that. That's a good catch. But that's kind of the construct of this process. So I'm going to come over here and I actually lined this out really quickly. So our 1030 bullish cross plus MACD plus ATR. Enter on a bullish cross of the 30 or the 10 above the 30 with price above both. MACD histogram above the 0 line and expanding, and then use the 2 times ATR initial stop into the trade. So that's in the trade. Now we can adjust that stop as the price goes up. We could turn it into a trailing stop once that trade goes above. I've got this previous high here, and it's kind of in this range of this previous resistance. So very likely, I'm going to watch this trade for price to get up above that level and create a new breakout of a resistance, which makes a new level of support. And now, then maybe at that point, readjust that stop loss. And I could readjust it to 2 times ATR. I could use a trailing stop, but all I'm doing right now is 2 times ATR as an initial stop into the trade. So there's our first trade example here using this particular system. Let's take a look at another one. And again, almost a similar type of situation. So I'm going to look at this one, CRM. And all I did to do this was I ran a quick scan. Now I didn't want this to get off into the relative weeds of building and running scans. So I just ran a quick scan that was looking for price above the 10 and the 10 above the 30. And that's what we've got here. Another scenario where you've got a longer term downtrend that's kind of in that transition mode. It hasn't really yet given us a breakout. Gave us a false breakout on an earnings announcement. We've got an earnings announcement over the horizon a little bit here. But now we've got that same scenario, and I'll zoom in over here on the right-hand side. Price above the 10. We've got the 10 above the 30. And we've got expansion going on in the RSI. It's above the zero line, and we've got a light green bar, is maybe the easy way to look at this. And we've got a 7.11 or 7.12 ATR. Now, this is using my now apparently flawed formula, which JDH is resolving for us. So there you go. I love it when a community comes together. By the way, you guys are great and keep those conversations flowing. And Michael is a great advocate of editing your scripts. He teaches the ThinkScript webcast, I believe, still on Friday afternoons. Michael teaches that one, which is an interesting webcast. I'll let Michael put the link to that webcast series out there in the chat so he can do a little shameless self-promotion. All right, so now break above that moving average. Moving average is above the 30. We've got expanding momentum, and it's Thursday. Okay, Michael says Thursday. Okay, and it's increasing. We've got an ATR number, so let's do the same thing. So we've got this breakout. Now, no guarantees this is going to end up in a longer-term uptrend. No guarantees that it's going to break out of this sideways consolidation move. But I'm going to right-click, and I'm going to create a buy custom with stop. Now, if you were a shorter-term swing trader, like Mike teaches in his swing trading webcast, you might put an OCO bracket and put a target order on this trade to get out at a particular target. I'm just simply looking to get into the trend as the trend is moving. So where are we going to put our stop? I'm going to use this stop function right now. I'm going to take -2 ATR, and that's going to be 156.54 is where we're going to place this stop. 156.54, and we're going to let that adjust a little bit. Now, the price of the stock is currently trading at 174.10, and we're at 174.45 for our limit price. And I'm going to try to work that a little bit if I can. I'm going to try to work that down somewhat before. So we're going to see if we can get closer to that midpoint, which is 174.10. So I'm going to work this down to 174.20 maybe, or maybe 174. I'm going to say 174.15. See if we can work that inside that bid ask a little bit. And I'm going to make my stop good till canceled. That's 2 times ATR. And we're going to go ahead and we're going to click on confirm and send, read through this order. And again, this is 100 shares just by default. I have this demonstration account. I'm not worried about capital allocation. So I'm not worried about that. I'm using it simply for demonstration purposes. And again, it's not real. It is a real trading account, a paper money account that's made to look like a live trading account. 17,000 my capital allocation in this particular case. I'm going to put this in my market movers group so that I can see if I can come back and watch that on a regular basis. And I'm going to go ahead and I'm going to click on send, and we're going to see if we can get that trade. So we got it at 174.09. So we worked it inside where that midpoint was, just a little bit. Sometimes that works. Paper money, more often than not, it's going to fill at the mid. In a live trading account, it's probably worth moving it inside that midpoint a little bit to see if the market will come to you, and be patient about it. If it moves, that midpoint may move a little bit. The bid-ask spread may widen out a bit. If it's a very liquid stock like this one is, or like Microsoft is, probably going to get filled. Not a guarantee. All right? Yeah, you can put in a limit order at the 10-period simple moving average. Sure. Absolutely. That's one way to do it as well, and get that breakout, right? That would certainly be a way to kind of optimize this for maybe a little bit more aggressive move, because we're now about halfway through, a little less than halfway through the trading day. Now, another variation of this in terms of exiting the position or waiting for getting into the trade might be a situation where MACD hasn't yet started to expand, right? Starting to expand. Yeah. So if we were to take a look, I've got a couple of other examples here. I've got one example that I wanted to look at, which was Regeneron. So I wanted to just talk through this, and then I've got a couple of other examples I'll throw into this mix because we're running short on time. So I wanted to get this one into the equation. So that is REGN, Regeneron. And so you've got a couple of things going on here. We've got, I mean, this is a large, fairly large price stock. Moving average has been moving down. Now you got the 30-period moving average moving up. So a little bit different than the other two. So we've already got an intermediate term trend started here. We've got a short-term trend that's accelerating, and we've got price above that level, and it's been above that level for a little while if we zoom in here to a shorter term time frame. But notice what's going on with this MACD. It's diverging somewhat, right? So it's got a divergence in terms of that momentum indicator. So this is one of those situations where a trader might stop and say, wait a second, if I've got a divergence of momentum, even though the stock is uptrending, which is defined by price above the 10, 10 above the 30, 30 rising in this particular case, I've got an intermediate term uptrend, but I have a bearish momentum divergence. This is a circumstance where we may choose to wait and say, okay, all of those conditions exist. And if I get rising momentum or expanding momentum, meaning a light green line like we saw with those other two, Rita, then enter the trade, else wait. So what I'm going to wait for here then in terms of this condition is a rising MACD. I want to see a MACD increase. So that's where we could create this trade once again. And I could come in and I could put in a limit order. I could do a buy custom with stop, but I could also do this as a market order with a condition and then build that condition in that we've got a study, and we might choose something like, and this is what Michael Fairborn is really, really good at, is coming up with these study conditions, right? Is build a study condition setup. If we add the condition, what is the condition that we want to see? The study, MACD histogram that is greater than or equal to the previous bar, right? So we want to see an increase in that MACD. I'm not going to go deep in this because we don't have a lot of time, right? But that's one way that we could build a conditional in here that would say, all right, if the MACD now starts to expand, then, and all of those other conditions still exist, then enter the trade, else wait. Now, two others that I wanted to look at just before we go, very, very quickly. One is OXY, Occidental Petroleum, expanding RSI. There's our ATR. We've got that gap up today and that breakout. Again, not a recommendation, but simply an illustration of this type of system. And then DVN, Devon Energy is another one. Expanding RSI, or excuse me, expanding MACD, not RSI. And this is one where we've just barely had that crossover of the 10 above the 30 and price is above both. So a couple of other examples of that type of entry pattern into this trade. If you want to learn a little bit more about these ideas, come on over here to the Trader Talks webcast page. And you know what I'm going to do? I'm going to do this, ATR. I'm just going to type in ATR because I think it makes sense. Here's Brent Morris talking about average true range. Here's Barb talking about long options with ATR, technical indicators. Barb breaks this down in the Getting Started with Technical Analysis webcast. MACD, ATR, and moving averages is a good combination of that discussion. So some great stuff there. If you have not clicked on subscribe, we'd ask you to do that here so that it makes it easier for you to find stuff. And give us a follow on social media at Ben Watson CS, at Michael Fairborn CS. Guys, thanks for letting me step in today and go through some stuff. Talk a little bit about a simple trading strategy. Take care, everybody. We'll see you soon. Bye bye.